Hey folks, quick update. I normally do these a little bit later in the day, but I've got a little bit of time now, so let's have a look. And I'll just go through currencies and then stocks and metals and then energy. So let's have a look at the currencies. Now, I think as always, let's have a look at the dollar index. And this is quite an interesting one because we've taken a new position based on what's happened here. So we broke down through this very tiny channel bottom. This is a day chart and touched the 50-day moving average, bounced back up again. We didn't close back inside the channel, but we tried. And today we're back inside the channel now. And that looks like it may be a reversal pattern. Overall, I think that there could be more strength in the dollar in the coming weeks, days, and months. So with that in mind, I've just taken a short position on the euro, but that's kind of a hedge because I'm also short on the dollar yen, and that one's turning out okay so far. And maybe the euro and the dollar yen will fall down, and that should drag the euro yen down as well. Now, I've got a position on the euro yen personally. I haven't called this in my members area, but basically I'm looking to short the euro yen whilst we're below the 50-day moving average. On the dollar yen, as I alluded to in the last video, it was actually a live stream, we sold another little bit here, and I'll be looking to sell another little bit around 157. The overall idea is for the dollar yen to move down into the 140s and then the 130s eventually. So with a bit of luck, and I don't know, it's a slight hedge, we could get the euro moving down and the dollar yen moving down and the euro yen moving down, and that's kind of the way I'm positioned at the moment. We'll have to see how we go. Remember on the day chart on the dollar yen, this is the pattern I've got drawn from a fractal before. We're still following it roughly, but we haven't had that retracement back up to the sort of 157 level that I'd expect. That's a 50% retracement of the move down from the top. So we've got about 38% so far, and maybe we can get up to 157. That's the 50% fib, and add some more there for this big move down. We had the first intervention here on the 29th of April, and if we do follow this fractal pattern, we'll get another intervention at some point when the market tries to push back up again. I think now that we've established a top at 160, the Japanese will do a lot more work to keep this down below there than they did last time. In fact, we haven't even bounced back up as much this time. If we don't manage to bounce back up to the 50% retracement around 157, it just means that the dollar yen is probably weaker than on the last occasion. So that's currencies. Now going across to stocks, well, I'm basically just hedged on all my stocks right now. I don't have any preferred direction. I'm going to wait yet one more day. I have a long position on NASDAQ and a short position, and the long position's in profit right now, but I'm not going to be doing anything right now. I want to see how this week plays out. So we've got a lot of European and US news coming out during this week, a little bit of news from Japan. We've got the Michigan sentiment survey on Friday and jobs on Thursday. So let's see how all that pans out. There's no rush to get out of these hedges, and I'm just going to remain hedged. At some point, I'll take the profits on the long trade and add to the short side, or take profits on the short side and add to the long side. Right now, we're kind of stuck in the middle. And here's NASDAQ and S&P right at the top, and you can see we've retraced somewhere between 61.8% and 78.6% on both of these. So we're into resistance levels. These are the day charts. If we switch to the 4-hour charts, you can see we're right up into these order blocks up here. Just above us on S&P, this big red zone, and we're right into it on NASDAQ already. So my strategy is to wait and see and do nothing actually, and wait and see how these plays out. It might take another day or two, and maybe even towards the end of this week and next week. I don't know. I'm in no rush for those. We're long on gold and Bitcoin, and those are holding up pretty well. I like this sort of bull flag on gold, holding above the 50-period moving average on the 4-hour chart, but we're still below the 20-period on the day chart, and we need to push up through this resistance level. Same thing on Bitcoin, holding above all the moving averages, looking pretty good, and actually holding above this channel top. I don't quite like this reversal candle at the 50-day moving average. It could pose some threat. We may have to retrace back down to the bottom of the channel, and that would take us closer to 54,000 and maybe even the 200-day moving average, which is around 50,000. I think if we break below 50,000 and the 200-period moving average and hold beneath there, that'll be a little bit of a problem for Bitcoin. But as long as we're above there, and particularly above these lows here, this last swing low at 56,000, 56.5, and above the channel bottom, and if we got down there in the next few days, that would take us down to about 54,000. That's a possibility. But for now, I'm long. I've still got some ammo. I'm not fully positioned on this, but it's looking okay so far. If you're trading copper, you might want to just consider this path. We did retrace a little bit earlier than I thought. We got down to the 20-day moving average and the support line. I thought we might take a little bit longer. This is not to say we won't try and get back down there and bounce off there, or that we may even retrace a little bit deeper down to about $4.30. But for now, as long as we're above 446, we should be looking to buy dips, but allow for a dip down to as low as 430. US 10 years just coming off as I thought it might, but I wouldn't be surprised by a bounce off here. We've got a kind of a one up, one down, although it's not perfect. There's the spike low, there's the spike up, and now we're just probing that low again. If we can hold above there, and particularly this channel bottom, notice the 50-day moving average, the 200 and the 100 all below us. So for now, I still favor dollar strength. That means euro weakness, pound weakness, etc., except when it comes to the dollar yen. And that's why I said I'm a little hedged by being short the euro, against the dollar and the dollar against the yen. I also think that maybe they could both work out. Well, let's go across to energies, and we're short on natural gas now. That's where we went long. We took profit at $2.15, and we've now sold at $2.15. We formed a reversal there at around about the channel center line, and we should be moving down. Now, my targets are $2, the bottom of the channel, the 50-period moving average on the 4-hour, and the big round number and the big consequential breakout number. But I think we could actually break a little bit lower, and my secondary target is 1.85. That would take us back down into this sort of zone here where the 200-period moving average and the 100-period moving average is. Once we get back down below $2, if we do, or maybe even down to $2, I'll consider reversing the short and going back long again. I'll be watching this closely today, and on the Henry Hub day chart, let's have a look at that. And these are the two lines that I drew in a few days ago. Maybe we'll follow the red line down to these moving averages. That's what I'm hoping for because we're short, and then reverse off there and bounce back. Or we might have to go a wee bit higher. There's the 200-day moving average, and that's currently at $2.47. It might be that we have to visit there first and then move lower. I don't think May is the month to be looking for an incredibly bullish move in natural gas, so let's keep an eye on both directions, longs and shorts. If we break above yesterday's high, I'm going to immediately hedge this position and then look to resell around the 200-period moving average. If we move down, I'll look to exit at $2, a little bit there, and a little bit at 185, and then reverse to long. Note that this level that we're at now is the bottom of this big rollover gap, and this level here at around 245 is at the top of this rollover gap. So that's the general idea, short into $2 or 185 if we can get that far, and then potentially a reversal from there to take us back above $2 or from $2 upwards towards about 240, 250, and maybe even up to about $3 or $3.50 later on in the year. So that's the vague strategy for natural gas. Of course, we'll play that by ear, so to speak, or by price action rather, and see how we go. Now, one more trade here is WTI. We've just gone long on this, having taken profits from the shorts down at the bottom here, the channel bottom, and I've just reversed to long. Now, I don't know if this is going to bounce here, but I will hedge if we break down and close beneath this level. My idea is for a bounce back up into some of these resistance levels above us, maybe the channel center line and the 20-day moving average, and then a move down, a break through the bottom of the channel, and a move down into the 70s and the 60s. Sounds like an old song hit list. Okay, folks, that's it for now. Have a great trading day. If you enjoyed the video, I'd love your subscription and thumbs up, and I'll see you in the next video.